3, 2, 1. Welcome to the Forex Trading Show. Forex trading live every weekday morning. Real trades, real profits, zero analysis. Set back, relax, and get ready to profit. And now, your host, Terry from FXWithTerry.com.
Welcome once again, fellow Forex traders. The original live I launched this morning was on some bad internet. It could go bad again. I did switch. Didn't have my satellite out. I've moved my RV. Didn't have my satellite out. Thought I could get by with mobile. Wasn't going to happen. So we'll start out. We'll look at the results. And then we're going to talk about account protection. We're going to talk about hedging. And we're going to talk about practice. Write that down on a piece of paper. Hang it on your refrigerator or your bathroom mirror. Practice hedging. Practice hedging. Derek says no sound. Well, that's definitely an issue on your end, because this says external microphone. Let me go check my settings real quick. Let's see. Here we are. Yep, absolutely. There was no sound, was there? Nope, it's working on my end. Let me click a few changes. But yeah, you should be able to hear me. So let's not go any farther if people are not going to comment and say that they can hear me. Everything looks like it's working properly. 30-second delay. Let me know if you can hear me. I can hear you just fine, says Mark. Of course. So let's dig into this. We're looking at the free signal here. Move some things around on my screen so I can see it better. Stand by. Here we go. So we're looking at the free signal. GBP USD sell is a great trade. We're somewhere about a third of the way toward TP. Had a huge spike this morning. I'm looking at the 4-hour chart. If you look at that, that's a nice wick there. It caused, remember, this system will jump in based off of volume, and it wants to trade against that volume. Because guess what? When you get volume that maybe goes that way, up, in this case, for example, that volume will then go that way. Okay? I don't want to get too far into it, but it's a great entry / trading strategy. I like it. I like it. It works for me. You can't overbid with these strategies. When I say overbid for your account. You've got to be prepared for them to push it and continue to push it, trying to take everybody out of the market, and then they'll come this way, right? So just how it works. Anyway, GBP USD looks really good. We are in the middle of summer 2024. It is currently August 12th. Maybe a little bit past halfway, right, of summer. The volume's going to be slow. Kids are starting to go back to school. All of the people that run the markets, that manipulate the markets, they'll be back at work, certainly in September. Give it some time. I personally, and I said this weeks ago, in the summer, when it's just flat and slow, bring your bids back, relax. No stress about overbidding in some of the weirdest ass market conditions we've ever seen in forever. Somebody sent me an article the other day where they talked about what happened a few weeks ago when the market just tanked. All these currency pairs. Obviously, the stock market did the same. I'm not saying Forex doesn't follow the stock market. Forex follows sentiment in the market, feelings, the way everybody feels like they should sell. But I heard there was this huge, I don't want to get too far into it, but you can kind of go look this up, What happened was, I believe, and I could be completely wrong, but I'm going to give you the concept here. I believe the Japanese yen has been, and I'm probably going to use the wrong terminology. Whatever, I'm going to fucking say it. Japanese yen has been offering about a 0% interest rate, and they jacked it up to a 0.25, I believe. So everybody started selling off. It created this huge sell-off. And I think that's what moved the Forex market a few weeks back really heavy, like farther than I've ever seen it go in terms of being in a trade and then just pair after pair after pair after pair going so far against that most people's accounts couldn't handle it. Hence, we started talking about hedging. It's just something I do. It's a real simple mathematics. In fact, I'll say it real quick. A hedge is an equal and opposite trade. If you're in a buy at $1 and that's too much for you, you can do a sell at $1 and it will lock you in. I get it that it is uncomfortable for people. What's uncomfortable for me is watching people go, it'll come back, it'll come back, it'll come back. Oh, there went my account. You don't know that. So when it gets uncomfortable for you, place a hedge. Now, I will tell you, when you place a hedge, you better be staring at your goddamn device or the trade. You better be paying attention to it. You better be. Because here's what's interesting about it. A hedge, and I'm getting ahead of myself here, is unique to your account, to your bid, to your margin, to your risk level. But a hedge is the protection for your account. Go ahead and get sucked into and lulled into the market going, there's not much going on. And then it starts moving in the middle of the night and you wake up and it's too late. If the hedge is the key, there are a lot of ways to apply it. We'll talk about that. Free trade here. Nothing has closed overnight. As far as for the week, $368.88 had you bid a 0.10 base lot size on your account. You could bid more. I bid more on some of my accounts. You might have to bid less because your risk appetite is lower or your account balance is lower. So many people out there, it's confidence level, right? So many people out there trading $1,000 accounts. Okay. That's not very much to be trading in the market. Doesn't give you much leverage on anything other than maybe trading one currency pair. Certainly, if you have a $1,000 account, right? I'm just using this as a general example. Trading a highly volatile metal like gold, not the smartest thing in the world. Certainly in this market. Now, I was mentioning that the Japanese yen, which affected a lot of the AUD pairs, certainly AUD JPY went absolutely bonkers. They said that this sell-off a few weeks ago only sold off about 50% of what needed to be sold off. So that suggests to me, and it's all speculation, that we got another 50% sell-off coming. Who knows when? Next month or 2 years from now? We don't know. But the free signal is looking damn good. Depends on what you bid. But we have a nice positive net profit of $368.88. You will have bid more or less. It's as simple as that. It's not, with my system, you're not stuck with, if you're looking at this going, well, $368 in 5 days isn't that much. Okay, bid more. Have a bigger account. Bid less if you have a smaller account. Trade less if you have a smaller account. So let's pause here. We'll move on. So we're looking at the free signal there. Let's look at my account list and see what I'm going to tell you next. Let's go look at what I'm calling my 10 pip hybrid demo. Let me pull it up. We'll talk about what that is. Here it is. We're in a couple trades. As far as I'm just going to show you the closure, since this is a paid subscription or a license feed. I'll show you what it's closed overnight. It's closed 2 USD JPY trades at in this particular case, if you're bidding 1.0, this is a sample account to show you what the system can do. You've made $103 $103.55. You may have bid more. You may have bid less. This thing is scalable. And you know what? I'm happy trading. There's literally 2 pairs in this group. We're trading, I believe it was CAD Chief, CAD Swiss, and USD JPY. And yeah, it's going to feel slow. The market's slower than shit right now. If you're willing to take big risk, then I'll show you what the overall account is doing in terms of all 22 currency pairs being traded. Obviously not all of them in play right now, but I'll show you the amount of volume on that account. So let's look at that result. And again, we'll end this session with talking about all of the different hedging processes. So the next one here is a test account that I have that says we're trading the one profitable pair feed and gold. So let me pull that up. Let's see here. Here it is. I am going to go ahead and look at this gold trade. I'm going to show all the trades live because, again, this is a test account. But basically, it's more of a, it's kind of like, here's what you'd be getting if you were trading this feed and this feed. And many people are actually trading this. So I'll show this. So this is a sample 10K account. And you know that I've been pushing this one hard, trying to force it to go into some losses and so I could, sample hedge. Now, I'm going to actually do this live today, okay? And this gives us the ability to talk about a hedge. So this particular account is at 552% margin level. Now, I've let this go. Again, I want to let this go so I could use this as kind of a training opportunity. So let's do some math here. Okay, I'm in 1, 2, 3, 4, 5, 6, 7. I'm in 7 gold trades. Okay. And let me make sure that is correct. 1, 2, 3, 4, 5, 6, 7. Yeah, I'm in 7 gold trades. Now what we're going to do is we're going to add up this lot size. We're in 7 sell trades. I'm going to place a buy trade. Now here's what's interesting. And this is the learning process. I'm thinking I may have let it go too far, which is what your average person is doing right now. Okay. This is not a real account for me. So I'm using this as a sample and an educational opportunity. So let's place an equal and opposite buy trade on gold. Let's add up the lot size. Okay. So I'm at $5, $9, $10, $11. I'm not going to add up the second number. So at $11, $12, $13, $14. So then $15, $15.50. So can you confirm in the live chat that I'm adding that up right? $15.50. Okay. So let's do that again. So 5, 9, 10, 11, 12, 13, $14, $15.50. Okay. $15.50. So that's a 1.55 lot size. Okay. That's a 1.55 lot size. And I need to do it in the buy. So let's see what's up here. Let's pull up gold. I need to do, and watch, I'm doing this in real time. Watch me type in something wrong, right? This is real life. 1.55. So that's $15.50. And we're in a sell, so I'm going to do a buy. I'm guessing, especially since this is a metal and this is highly leveraged, it's probably not going to allow me to do the buy. It's a little bit late in my margin level, but let's see. Okay. I'm going to hit buy. I don't think it's going to let me. I'm going to hit buy. It let me. Okay. Again, I'm out there taking guesses. Now here's what's interesting. My margin level percent now it kind of skews the data a little bit because I'm in this EuroCAD right here. We're in a basket of EuroCADs, right? although it's not hitting the account too much. It's this gold that's hitting it. So I just placed a $15.50. Now, I have to watch this, okay? Because it protected my margin level percent. It basically locked me in at whatever current, I'm not going to call it a loss, but whatever current drawdown is on these open sell trades. It locked me in on that current drawdown. Again, the number at the top a little skewed because we're in that basket of EuroCAD, right? In fact, I could close EuroCAD right now if this was a real live account. I'd be pretty much at break even. So take that out of the mix, stopped accepting those trades, and only focus on gold. So let's actually go look at the chart. And here's where you got to be careful. And this is happening in real time. So I wouldn't be talking. I'd be fucking trading right now, right? So let's bring it down to a lower time frame, okay? You can see my hedge up here. And the price is just kind of hovering around that. What I want to do is I'm going to go ahead and either manually do this or have a stop loss, because I don't want this hedge, if you come back and look at it, it's in a little bit of profit right now. I don't want it going that negative. So I might say to myself, at X negative on the hedge, I'm out. Okay? And then I'll re-enter if I need to. I'm never going to look at this hedge. I shouldn't say never. I'm just not going to look at this hedge as trying to take profit. That's dumb. This is purely a protection mechanism to stop my margin level from bleeding. So what you got up here is, if you look at the margin level right now, it was at 500, now it's at 3,000. What that means is just that buy and sell side of gold has just canceled itself out, right? This EuroCAD, in fact, you know what? Let's actually do this. I'm going to go ahead and cancel this out, and I'll be at about break even. So let's just close these. Let's get out of these. Let's give all of the power and mathematics to this gold trade. And I got to keep an eye on it so it doesn't run a huge negative on me, because I want to get out of it. I'm going to say I'll get out at about a negative $100 on the hedge. I'm just going to use that as a random example. So let's go ahead and close this EuroCAD. So I'm going to close that one, close that one, and I'll close that one. And if you look at what I just did, if you look at the history, I basically got out of break even. Okay, cool. That's not hitting my account anymore. Now, one thing I'm going to have to do, and I'll have to do this in the background, is I'm going to go stop this account from accepting any trades except gold. So give me a second here, and I need to pull it up on my end. And I believe, yeah, that's not going to work, is it? Let's go to pause, and then I'm going to pull it up on my end. Okay, cool. So I'm just pause. Give me a second. Let me look at what account number this is. It is 918. And what I'm going to do is I'm just stopping. Here it is. I'm just doing this behind the scenes. Give me a second. Tile vertically. That is really weird what's happening right there. Just a weird visual on my account. So I'm only in gold. I'm going to go ahead and tell the system to, let's see, symbols to copy. I'm going to tell it to only copy gold. XAU USD. That's fine. And I'm going to make sure. Okay, so we're good. So it's only copying gold right now. Okay, let me come back to the screen for you. Happen in real time, but that's the concept, right? And we'll come here. Okay, so you can see my hedge is negative. Gold is going fucking ape shit right now. Whatever. I'm just going to protect my account. Okay. Now you can see I was able to do it at about a 500% margin level. I probably would have done it earlier, maybe 800 to 1,000 margin percent. That's me. You've got to pick a number for you. What I see people doing is, oh, he's pushing it right down to 1,000. I'm going to do it at 5,000. That's probably a little fucking early, right? So guess what? I'm going to give you a word. I need you, and you know what? Mark just put it up on the fucking screen. I'm going to give you a word that you probably should write in a black permanent marker on your forehead. Practice. How do you practice? Free fucking demo accounts, man. They'll give you as many as you want. Blow the shit out of them. Start to play this game. It's a balance. Do you see how this hedge is going a little profitable, a little negative, little profitable, little negative? For some reason, I'm not even going to speculate why, there's a ton of fucking volatility in the gold market right now. It is what it is. I don't give a shit. Now, if you're in the group, like some people are, stressing out, they hate it. People hate it. And I'm saying this to everybody. People hate it when I say, don't get emotional about it. This is fucking math. It's simply math. I did an equal and opposite hedge. Now, here's what's interesting. You know how I got rid of that? I canceled the Euro CAD out, right? Break even. Because I want to put all the focus on this gold trade. Look at what my margin level percent just did by having an equal and opposite trade. It's 0. So it's not affecting me at all. This particular drawdown is locked in. It's locked in. Keisha says, how do we calculate the lot size again? It's literally an equal and opposite trade. Okay? All I did was add up all of my lot sizes here, and all of these sell trades equaled a $15.50 total lot size that I was in. So all I did was placed an equal and opposite hedge at $15.50. Equal. It's a hedge is an equal and opposite. Now, this is one way to do it, and I'm going to focus a lot on this one. But there are other ways to do it, meaning I could put in a hedge that's equal and opposite, or I could put in a hedge that's a little bit larger. Okay? Yeah, Brian says, add your sells and make a buy. Yeah, that's it. It's just an equal and opposite trade. So it's locked everything in. It's locked in whatever drawdown I had, and it stopped my margin level percent. If you never did anything else to this account ever again, it would eventually end really positive on one side or the other, and or break even in this case, and you could get out. But you can see we have got a lot of volatility right now. So let's go actually watch the chart here. Let's go down to the 5 minute. See how it's kind of frozen right here, right on that hedge? And what that means is, and this kind of sucks for hedging, is that typically when you hedge, it's just gone too far for you. And at that point, it's typically the turnaround. Now, if we hold on to this and it goes way ballistic up farther, I'm at least protected. Now, this is so unique to your account. Because once you understand this, then you can play the game on either side of the trade. And I don't think I would ever be able to give you all of the scenarios that can happen. Let's just talk about a few basic ones. Let's say, in this particular case, my hedge has protected, and you know what? Price is finally starting to come down. So at some point, I need to get out of that hedge at a little bit of a loss. You're already in dangerous territory, right? Because you let it go too far, you bid too much, or the market just went too far on you. A couple of weeks ago, I wasn't able to say, you bid too much, you let it go too far. The entire market just went ape shit 2 weeks ago, right? Week and a half, 2 weeks ago. Nothing we could do about that. Nothing I've ever seen in my life. So you gotta manage it. So a lot of it is getting into this hedge, and let's keep an eye on it. So, oh look, my hedge is $141 down. So I can get rid of that hedge. Let's just go ahead and get rid of the hedge, because what I want to do is stay right there. We're gonna keep an eye on it. So let's close the hedge, okay? And let's go look at what our margin's at 683%, okay? So I'm gonna keep an eye on this, and I get it. I just forced a loss, right? I'm in emergency account protection mode at this point if I'm doing this, because I'm late in the game. There is no whoops. Brian says, whoops, haha. No, that's what I intended to do. I am protecting my account. Now, I'm going to sit here and watch this. I'm going to draw a line on the screen. That's where we got out of the hedge. Let's see what it does from here. Okay. If it continues to push up higher in this particular area, I'll probably hedge up here. Right now, I want it to go down because if I zoom out a little bit, oh, that's right. We're trading. I'm thinking it's going to show take profit on the screen. It's not going to show that. The system is not designed to do that. So again, this is where we're at. So I'm sitting here playing the game. I know that going down is where the TP is, right? Because we're in sell trades. And yes, along the way, because of I'm playing an extremely volatile trade, which is gold. You trade metals, it's fucking volatile as hell. Okay. And in fact, it's an odd time for it to be volatile. London just closed. London market just closed 36 minutes ago. And New York's going to close in what? 4 hours from now. 4.5 hours from now. Probably all the movement's done. I will speculate for myself, not for you, that the price is probably going to go sideways. But I'm going to keep an eye on it. Biggest time to keep an eye on it is when, later in the Asian session, maybe 8 p.m. Eastern. Certainly watch it at London Open, 3 a.m. That's when you start playing with it. And a big movement on gold is typically going to happen during the New York session. So I'm perfectly fine with this. Like I understand, like this system makes some really good money. If you go over here and you get emotional about forcing a loss, and again, this is a sample account. I want to show you, but I would have no problem doing what I just did on a live account. Because, guess why? I'm going to hit a button here. If I go to the week, right? Remember how I forced, again, this is a management. I forced a bunch of losses last week because I was forcing I was overbidding. I wanted to show you how to do this. This is a sample learning account. It's just how it works, right? Obviously, one of the things I'm doing, if you look at the overall sentiment of my trading on this account, is I'm overbidding. I'm overbidding. I intended to do that. I have a base bid of 5x on this, and then it went to 10x, 10x, 15x, 25x, 40x, and 50x. Right? Because we don't control the market. I get that in the group, people say, well, I thought this was a scalper. It absolutely is a scalper. 100% a scalper. And it's scalped $10 out of the market every day for the last, months, right? But here we are. Here we are. If you feel like you need to set a stop loss on your trades, go ahead. But the math works out. Because if you go look at the account that I'm trading this on, the base account that this is coming from, it's coming out at a 0.01 lot size, and it's on like a $5 million account. It's never going to blow itself out. The trade itself is not going to get blown out on the way to you. It will only blow out on your end if you've bid too much for your tiny little account, or you're not willing to manage it. Because even if you have a small account, you should be able to have a point in time. Let's go look at the chart here. I want to watch this. Yeah, it's just kind of wicking. See where I got a bunch of wicks? It's very indecisive up here. Extremely indecisive. Mostly because London just closed. New York's going to close soon. Like the volume is just completely slowing down. If you zoom out of this and go to the hour, you'll see that all day we were down here in a started the Asian session, and then it has went ballistic. Normally it would not do that. You get a push up, a pull back, a push up, a pull back. So what you can't do, like imagine if I built a system that only traded these movements. You'd get like 5 trades a year, and you wouldn't be happy with it. So what you have to do is you have to build a system that will trade the movements, and here's where the kind of the win rate, the lose rate comes in. You know, if you got like a 70% win rate, a 30% lose rate, that's a pretty damn good system. It's the 30% of the time when it does this that you need to go, I'm either out because it's going to go too far. Don't be afraid to take a few losses. It's profitable enough at a certain point where you could take a week's worth of losses and still be in the game, but be out, still be in the game as far as your account goes, but be out of the game on this particular crazy movement. You just have to be paying attention to it. You have to watch that. Now, what I could do, and what are we looking at here? The 1 hour. Let's go back to a lower time frame so I can see its movement. So in my mind, I'm pretty much watching this range here. And I'm going to hedge above it, and I'm going to get out of the hedge below it. I'm just going to play this, right? Now, I'm not going to sit here and hedge and loss and hedge and loss. I'm going to go, okay, we're in a range. Let's let it play. The only time I'm going to hedge is when it breaks pretty heavily out of this range. Okay, need some more protection. I still have 662% margin level for me in my non-risk averse life, right? Because I'm not that averse to risk. I'm perfectly fine with that. It's about where I would do it anyway, personally. So we're probably going to get sideways, and my hedge was, again, I'm doing this all as an example. Didn't hurt to do it then. If it wasn't appropriate to do it then, I wouldn't have done it. But I'm feeling pretty good about this, and what we didn't know right here is when I forced that little bit of loss is we didn't know if it was just going. Because at some point, we'll take TP down here in this basket of sell trades, right? Mathematically. But I think that's about the most I can say about it. I'm trying to think of if I want to explain to you a more complex scenario. Okay. Let's say in this particular scenario, we're looking at the 5-minute chart. Let's say in this particular scenario, what you saw me do at about a 550% margin level was a little late in the game. Let's say you did it at 1,000, 1,500%, let's say. 1,000 for me seems to be kind of the sweet spot, because it can go down to 1,200 and then shoot back up to 5,000 margin percent level. You're like, okay, great. We've had just a massive amount of volatility here. Let me give you a couple scenarios that are for practice, and it's unique to your account, to the market movement, to what you've bid, to where your margin level percent is. Let's say we hedged, and it's not fair what I'm going to show you, because I can fucking see what it did, but I'm going to give you an example, okay? Because you have to practice this. I get that it's not fair that I can see, and I always complain about people doing this, but I'm doing this from an educational standpoint of what you could do with the hedge. The basic hedge just protects the account. Just protects the account. But what I don't want to do in the scenario you saw is I don't want the hedge to all of a sudden start going negative, negative, negative on me. The hedge is a protection, so the rest of the negative trades, or I should say drawdown trades, are simply protected. So let me give you an example here, and you can only practice this. Let's say up in here, you decided that's gone too far for me. I'm going to hedge. So you hedge, and it drops like this. So you get out of your hedge right here. Now it's coming back to the original place you hedged. So you took a little bit of a loss here. You protected your account. You didn't know what was going to happen. This could have kept going down and down and down and down and taken profit. So that's kind of what you're wanting it to do, right? But it didn't do that. So in this particular case, you originally hedged here. Now you have a price. What is it? Maybe 24.50, 24.54, let's say, on the price. Now it came back up through that. now's when you hedge again. And if you move forward, look at what it did. It would have went higher. It went sideways, but it went higher and higher and higher. And now this is when we want to be holding the hedge. At some point, and again, this is I'm making up a random scenario because it's so unique to what the price is doing, to what your account's doing. So let me go back over here and kind of draw so you were hedged about right here, let's say. Okay. Well, it's not going to move with my screen. Let me do it this way. Let's say you were hedged about down here. Okay. This hedge is going to be positive. I've heard people say, should I take the profit now? You're not taking the profit from the hedge. That hedge is protecting the other side of your account. Now, at some point, if it keeps going, it's possible that you could add to that hedge in a positive way. So the higher this thing goes, and you don't know what's going to happen, but the higher it goes, your hedge starts to overtake any negative. So if we were at $15.50 hedge, we might add another $5 on the buy side. And at some point, if it's just going to run that far against you, let's zoom out. At some point, if it's going to run that far against you, and you're adding to the buy side a couple times, at some point up here, if you're just adding to the buy side on your hedge is protected, but now you're adding buy trades because you're like, well, I'm going to play this out. It's okay to do a couple different things here. You can close the buy trade you added, get some profit out, and then close that much profit from the sell trades. So now you're narrowing the whole thing down, right? And now that means that this hedge up here is bigger than your overall original trade, so you can reduce your hedge profits. So now they're still equal. So now you got smaller equal sell and a smaller equal buy, and you're narrowing it down. So you took some profit up here, but you maintained the hedge. So you're going to close losses, and you're going to close wins to equal these two trades back up. I know that I'm probably getting way too technical for you, and I can do a video about this, but you're just balancing everything. Here's another scenario. You've got your hedge here, and you started adding some buys. You're like, wow, I'm getting more and more profitable up here. I'm getting cocky. At some point, the profit up here, because it's more than the sell side, can potentially equal or massively reduce any of the sell drawdown. So you're just playing one against the other. That's it. In fact, Brian makes a good point here. Brian says RSI of 92 on the 4 hour, right? Yeah. So the RSI up here is at 92. You can see 92.3. So that means it is way overbought, right? It is way overbought. It is just pushing. Let me go back and see what it's done here. And we're still in my range. Okay. I'm still okay with it. I'm looking at my margin level percent, 650%. I'll start making some decisions when it leaves that range. But I'm gonna guess that it's probably not going to. I'm going to guess that it's probably not going to leave this range because now the market volume. Now, we may see some, and I've seen this happen at about 2:30 in the afternoon, which is, it's 12:49 p.m. Eastern. 2:30, you'll see some movement on a metal. We'll see. I'm watching it. Now, let's get technical on this. I could figure out what this price is up here at the top, and I could place a buy stop or a buy limit, right? Meaning if the price gets back up there again, it's going to do a buy. at equal and opposite of what I'm in. So I'm in at $15.50 total sell. It would enter the buy if it moves up there. Now, I might not set it. I might set it right at the top of this candle, right, on the 5 minute. That doesn't mean it's not going to go up there and launch through it, but it protects me. So I better be aware that if that pending buy order up there launches, I need to be aware of it. Now, I could set a pending buy, and I could also, when it launches, I could set a stop loss. Okay? So I'm in, out, in, out, in, out. It sucks. I'm taking some losses, but I'm protecting the account at this point. This is not about profits at this point. This is about probably sacrificing some profits to get out of this. The only way to handle this, my friends, is to practice. Like that guy that got a hold of me earlier. How do I cancel? I'm like, well, you just asked me to set up a copier for you yesterday, which is true. And the guy says, yeah, I thought this was set and forget. I set up, he is what he said. He said, I set up gold on an account and blew it out. Well, Jesus. You know what you should do? Watch this. Hey, Terry. I'm getting ready to set up a gold scalper on a live account. That live account is X dollars. Is it a good time to turn this on right now at X bid? I would have said, don't do it. We're in the middle of a drawdown trade. And guess what? If you only get that one trade that's up here, you're probably going to do all right. But guess what? If you jacked your bid up, and we're already at a very highly increased bid, now you're going into a gold trade up here at a really high lot size that your account probably can't handle. You know what I would have told that person? Yeah, don't turn gold on right now. I'll go ahead and make an announcement in the group. Gold has closed. It's okay to turn that on now, and you'll jump into the right sequence. They didn't say a goddamn word to me. And then, I can't handle this. I thought it was set and forget. I quit. Okay. Or, if you like Forex, if you like turning Forex into anonymous Bitcoin and amassing Bitcoin, which is the smartest thing to do, you'd stay in it. But quitters are quitters, and quitters never win. Don't quit just because your perception was wrong. Don't quit just because the mind virus you have was wrong. Don't quit because you didn't ask me what you should do. I know at any given moment what you should turn on and not turn off. Derek says Ronco. No one will even know that. We are old men. We know what Ron Popeil. Set it and forget it. What was that? The rotisserie grill? Set it and forget it. And you still had to watch that. I bought the rotisserie grill. Burnt a bunch of chickens in it. So, I need you guys to practice. And the hedge is a great way to go. Start figuring out when you should hedge. Start playing the hedge based off of what's happening. There are so many scenarios. It's not going to be like, well, Terry, I hedged and now my hedge is $8,000 down. Well, you should have got out of the hedge. The hedge is simply a protection at a certain level. It's a protection at a certain level. At this point, you see me hedge. I got out at a $155 loss. I will hedge somewhere up here again. Now, you can play it against itself. You can be really risky. You can place your hedge here, and when it goes negative against you, place another sell. When it goes positive, place another buy, and a sell, and a buy, and a sell, and a buy, and a sell. You could do that. Practice it. It sounds crazy. Please practice the hedge. Go set up a demo account right now. You know what? You know what kind of demo account everybody should set up? $1,000. Because I know that's all that anybody's ever willing to risk, and go, it will be hard to manage that. It's hard to manage it. Why? Are you ready? I'm going to end it with a shocker. Are you ready? get ready. Why? Based off of what I told you about FX to BTC, the protocol. It's in the menu. It's in the group. It's in the free Discord group. Why? If you know that Bitcoin percentage of return is outrageous, why would you be relying on Forex as your profit structure? I'm not going to say it's dumb not to, but it's not the smartest thing. People, I'm telling you right now, if you would just hear me now or feel me later, if you would just trade your Forex account, especially in these before election stock market lowest of all time, Japanese yen interest rates selling off, craziest market we've ever seen. If you would just trade conservatively and then amass that Bitcoin, withdraw your profits. I don't care if it's $10. Withdraw your profits every time it's $10, right? Withdraw it weekly, put it into Bitcoin, and the amount of money you can potentially make, you won't, because you won't do it. You want it now. You want it fast. Oh my God, this Forex systematary has it wins all the time, and then sometimes it pushes against you. You thought it was set and forget. If you would just trade conservatively and put all of your effort into managing your account in a conservative manner, it's not like the conditions for the last 3 or 4 months haven't been doing the exact same damn thing to us. They go sideways and then they wreck your account. They go sideways and then they wreck your account. They're doing that to you intentionally, and just the massive volatility of the market. But if you would just trade conservatively, my friends, forever. But if right now, if you just trade conservatively and amass that Bitcoin and hold your Bitcoin, the amount of return you'll get will outpace any amount of profit you could make ever in the world. I guess I better do it again. I'm going to get ready to pull this up here. So give me a second and then we'll get off. I need to start doing this like every session. I'm going to pull up my Bitcoin investment calculator. And I want to set it at zeros and then I'll share it with you here. So stand by, my impatient friends. Okay. Let's share this and we'll end with this. I need to start doing this on a regular basis. So here is my browser. Here is my Bitcoin investment calculator. Let's go full screen. You're going to get tired of seeing this. But let's talk about what your lump sum investment of Bitcoin would be. Let's go get $50. Okay? Let's get $50 of Bitcoin. Our trading account has what it is. Okay? Let's say we don't have a lot of money to trade, and we're only going to make $12.50 a week in Bitcoin amassing. Okay? And let's say, you know what? We're in it. We're going to trade very conservatively. We're going to make $12.50 a week for the next 6 years. You've spent $3,000. I shouldn't say spent. You've earned $3,950 from your Forex account, which is now $202,000 because you decided to amass Bitcoin weekly. Now watch what it goes to in 7 years. So $202,000 from a $3,950 investment, basically, and you've lost fucking nothing off of your Forex balance. $1,000. You put $1,000 into a broker account. You still have your $1,000, but you were bidding hyper conservatively, making $12.50 a week in 6 years. So $200,000. At 7 years, it goes to $516,000. In 8 years, it goes to $1.3 million. In 9 years, it goes to $3.3 million. In 10 years, nothing changes. You're amassing $12.50 a week, and I just made up a random freaking number. In 10 years, it's $8.5 million. You are almost never going to take a $1,000 Forex account and trade it for 10 years and make $8.5 million. This is not going to happen. But if Bitcoin does its Bitcoin thing, the amount of return, look at your total investment, $6,550 in profits in 10 years from a $1,000 account. You can fucking do that all day long. All day long. So if Bitcoin continues its growth at 155% CAGR, combined annual growth rate, over 10 years, you'll make $8.5 million. You might make more, you might make less. It's certainly going to be more than your Forex account could ever do. So Forex is not anything but a leverage tool to amass Bitcoin and hold it. I don't know what else to tell you. This is what I'm doing. Now, I have the Bitcoin pool. And people, 99% of the people understand that the market, since I started the Bitcoin pool over the last, 2.5 weeks, has, if you overbid, wrecked some accounts. I'm not overbidding. I'm trading conservatively, right? It's basically at break even. We've had a terrible market. I'm not over leveraging, over trading, right? But what's going to happen is you're like, well, I've been doing this for 2 weeks and I don't have my $10, $20 of Bitcoin, right? Well, here's what's going to happen. When the market normalizes and stabilizes, because we get more volume out of summer, you'll be getting a lot more. It's an average, okay? It's an average over 12 months. It's an average. I'm not saying your $1,000 account will create $12.50 a week. It might have lost $20. And then the next week, it makes $20. That's break even. And then the next week, it makes $25 and makes up for the $12.50 that you didn't make for the last 2 weeks. It's an average. It's an average. Especially when you trade conservatively, you're going to have some low weeks, some break-even weeks. You might even have a tiny little loss. That's the nice thing about trading conservatively. If you do have to take a loss, it's pretty small. And it makes it right back, right? I have had this in the past. I've got more in it now, but I've had a $4,000 account of my own where I pushed the limits and I was doing 10% a week in it. When everything went crazy, I got out for some losses, and I'm basically at break even right now. Perfectly fine with that, because I was banking 10% a week. I was just way over trading, over leveraging. And a lot of it is not that I was over trading, over leveraging per se, like, because I know what I'm doing. I know how to hedge and protect it. The market was just delivering it, just the craziness. Now, I'm also not trading the full algorithm. I'm trading like one profitable pair feed, or more importantly, I was trading the 10 pip hybrid. And yeah, in this particular market, should you be stacking gold on top of other accounts? From what I can see right now, not a great idea. But I've said it in the past that you could do that. You could. But what happens is, here's the problem. Yes, you could trade one profitable pair feed if you're a subscriber, and the gold feed on top of each other. But what happens is, wow, look at this thing's winning every day. Up your bid. Wow, this is really winning every day. Up your bid. Wow, this is winning every day. Up your bid. Wow, this has gone too far against me. What do I do? Well, first off, stop upping your bid every time you win. That's just called degenerate gambling. You can go to my resources blog and buy the t-shirt, right? Join the Degenerate Gamblers Club. But you need to practice hedging. It is not an exact science. Oh, just hedge and you're good forever. Let's go back. I'm already looking at the trade. It literally is still going sideways. It has done nothing. Let me put this up on the screen and we'll stop it there. Yeah, it's still in this range here. Let me draw it. And we're just still in this range. It is what it is. I would expect that to happen this time of day. Who knows? We'll see what Asian session's going to do. Asian session going to push it farther up. I'll get into another hedge. Asian session going to bring it down. Looking good. Looking good. So let's stop it there. We'll continue to talk about the hedge protection trade. What I need you to do and what will be most valuable is please go practice this on a demo account and then share it in the group and say, hey, I'm practicing. Here's an account. I've hedged. How should I handle this? And there's probably there's an infinite number of ways to manage it. But you'll find that the market delivers in a certain way to where your hedge that you're practicing will probably only play out 3 to 5 different ways, maybe, typically 2 or 3 different ways. So until you get practiced at placing a hedge and playing the game, like you've seen me do live on the screen, you're probably going to be in trouble. One thing we didn't look at, I will stop real quick, is I believe the overall system account. Let's take a look at that. Premium signals monitor. Let's go look at that real quick. Standby. I just hit the wrong button. Premium signals monitor is 06 on the account number. Here it is. Let me share this with you. So right now, the overall system at bidding a 0.01 lot size, and no, I'm not showing it on the screen yet. The overall system is in about a $240 drawdown. We're in about 12.5 trades across 22 currency pairs. And if you look at, and this is really more for what the market's doing and market sentiment, it's closed $163.80 so far today. For the week, it's closed $1,663.49. And for the month, since this account has only been open for a little over a week, it's same, $1,663. So the overall system net profit, it makes you want to trade it, and you could trade it. But if you have the mind virus that this system is set and forget and that you don't have to do any sort of management, it's harder to manage a dozen and a half, 2 dozen currency trades. It's hard to manage them. When you're all out looking at that gold trade that we were looking at, it's a lot easier to manage one particular pair when you're focused on it and you're hedging that particular pair. So it gets a little bit overwhelming. At this particular point, it's hard, imagine having 4 or 5 trades that you have to hedge on. At that point, you probably need to have a virtual private server, and you probably need an EA that I can recommend, and it's just going to be overwhelming. So the idea in this particular market is to trade conservatively, amass Bitcoin, and focus on long-term 5 to 10 years of holding your Bitcoin as where the exponential profits are going to be. $10 now. Let me see if I can even do this on the calculator. I don't know if we can do it. $10 now. Let's say all we got is, let's say we got $0. $10 now in 10 years is Oh, Jesus. Well, that's weekly. Let me see if that's what I really mean to say. So many daily investment, annual growth rate. Obviously, this is not a good representation, but $10 now for 10 years is a $5,200 investment, which turns into $6.3 million, given the current trajectory and the past trajectory, the history of Bitcoin. I'm not saying $10 is going to be worth $6.3 million. But $10 a week over 10 years is $6.3 million, given the current trajectory. It might be more, it might be less. Even if it was only $1 million, would you be upset? Would you be upset if it was 70% less? I wouldn't be. But again, it's all speculation. It's all risk. It's all chance. In the end, if Bitcoin loses all of its value and goes to $5,200, then get out. Keep your $5,200. Nothing changes. You still have your Forex broker account balance. When it gets down to, obviously, it's like cutting a loss on Forex. Okay, I'm down to $6,000. It was supposed to be $6 million. I'll take my $6,000 out. I'll wait till the market comes back. I'll buy it extremely cheap, and if and when it shoots up, I'll get back to this number on the screen. So you do what you want. I'm no investment advisor. This is just what I'm doing, and it just seems to make sense to me. So practice the hedging. Bring your hedge practice screenshots and questions to the group. Until you learn this, you are at high risk, even if you're trading one currency pair on a $100,000 account at 10 cents per pip. You're still at high risk, because if you don't know how to manage your trades when the market does go against, and it just simply will for absolutely no reason, then you're in trouble. Stop doing that to yourself. All right, we'll stop it there. I'll be in the group, and bring your practice stuff. Let's get it. I'll talk to you later.
Thank you for joining us on the Forex Trading Daily Live Show. Get access to all of the free trades with full auto trading at fxwithterry.com. Be sure to subscribe and get notified of the daily live stream. And get ready for your next profitable Forex trade.